of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I am going to change the subject matter to a trading system. I've just posted it up here. This is the natural gas. It's a 15-minute chart. Going over, well, I think it's an 8-minute chart. Actually, let me double check to see what the what it is. It is a 4-minute chart, but it shows the swings that are going on here in the NASDAQ. And the reason why I want to bring this to your attention is because in 1972, when I was living in Westlake Village, there was a mathematics teacher from USC named Charles Lindsay. He taught mathematics there, and he was a neighbor. He was an African-American guy from Memphis, and we hit it off really good. His wife and my wife became friends. The kids became friends and everything. But in 1973, I shared with him the Gartley book, and I showed him, page 249 and 250, which is the ABCD pattern. Well, he presented this to Larry Williams. I never thought of doing it, but he presented it to Larry Williams, and he wrote a book called The Trident Book by Charles Lindsay, where he showed these, didn't call them AB equals CD. He was very creative. He called it P1 for A, P2 for B, P3 for C, and P4 for D. And as you can see here, looking at the NASDAQ, the E-mini natural gas today, there's one ABCD pattern here, another ABCD pattern here, and another ABCD pattern here, and another one's probably getting ready to form to the downside. Now, I don't want you to share this with anybody, folks, because it's really top secret stuff. Don't share it with your family or anybody else. Just keep it for yourself. Just remember, you can call it anything you can call it. X, B, C, D, G, D, A, K, anything you want to. But that was basically right out of the book. Well, what happened was Mr. Williams and Mr. Lindsay came out with a Trident trading course, and they sold it for $5,000, folks. And it was a one-time only deal. And guess what? There were 400 people that signed up for that. You can do the numbers yourself. But anyway, it was a great deal of money. The problem was when Mr. Lindsay, who was taking care of the finances, got the money, he did what we call in ice cream parlance a banana split. And he took off, never to be seen again. The last we had heard, he was working as a preacher somewhere down in the southern part of the United States in Mississippi in a small little town. No one ever confirmed it or not. Larry just wrote it off, and that was pretty much it. This pattern that you see here, this AB equals CD pattern, was sold also by a man named Frank Tubbs during the late 1950s, 57, 58, 59, in that era. And Gartley was still alive, of course. He died in August of 69. And Mr. Gartley didn't even question it or anything. He didn't even sue him or say, hey, this is copyright infringement. And his reasoning was, look, I got this from somebody else. And he said, all I did was look at old charts, and I happened to find this. He said, it's not anything that, should be patented. Well, later on, it became the Elliott wave or whatever you want to call it. But that's pretty much what happened. Tubbs charged, I think, $500, which was a lot of money in 1955, 56, 57. I believe it was 55 or 56. Anyway, it lay dormant for all those years until I found it in 1970, 71 actually, 71, 72. Don Mack at the Investment Center bookstore gave me the book, and he showed me the 50 pages that were important. I copied those, and those are the things that I studied, and I started writing a few articles for the it was Futures Magazine at the time, and also for, a couple places out of Omaha, I can't remember. And then there was one other place that I wrote an article. And then I was, talking about it on FNN, the Financial News Network, KWHY, in WHY in Los Angeles. I was a guest on with Bill Griffith and Elaine, and we had a lot of fun doing that over those years. Ron Insana was also there. John Bollinger was there. But anyway, that was the case. Now look, you just look at this, say, wow, that looks really good today. When days that it works really great. And when days that it doesn't work so great. So what you have to do is you got to find out if it starts working once, it's most probably going to work again. And that's exactly what's happened here. Look at this. So you had one beautiful ABCD, the second beautiful ABCD ending right at the high of the day, and then you make another ABC down at the low of the day. And what you've been doing now has just been going sideways since that time. Now, we still believe that we're down in an area here where natural gas may be getting ready to make a bottom, because we did break that magical $3 level. We got as low as $2.93 now in the March, and the March is the lead contract. So we are watching for a potential bottom coming in here in the natural gas, if in fact we can get it down to that level. Okay? Now, it hasn't happened yet, but it might soon. So we're just waiting for that. Now, the other thing that's important today is that on the break, right after the break, we're going to have, at the half hour, we're going to have Stan Harley of the Harley Stock Market Letter. He's going to be chatting with us and giving him some ideas of what's happening in the market. So those are a few other things that are really quite important. But please don't share this system with anybody else, folks. We don't want it to let it out of the bag that, maybe this thing really does work. As a matter of fact, I am coming out with a new AB equals CD. It's called A squared, B squared, C squared, D squared, and it'll be available for only $9,000 to the first 100 people that subscribe. Sarah just told me that it's already been sold out. So sorry you missed the boat on that one, folks. Maybe next year or later this year, I'll come up with the DEGF pattern for maybe $6,000. So I hope you all realize that I'm joking when I tell you this, because that's really what it is. This is so doggone simple. I don't understand why people don't understand it, but there's other patterns involved with it. The whole basis of what we do, folks, is that pattern right there in the NASDAQ or in the natural gas. That's what it is. Nothing less, nothing more. It's the same thing. Different news, different newspaper. That's basically all it is, folks. And when we get back from the break here, which is going to be here in very, very shortly, I'm going to go over some patterns showing you what that ABCD pattern did. In fact, we showed you yesterday what we thought was going to happen. And you'll see when we come back from the break, that's exactly what did happen. Does it happen like this all the time? No, sir. No, ma'am. But it happens a lot of the time, and that's what you got to be looking for, is a system that will give you consistent results over a very long period of time where you don't have to risk very much. But that's what the basis of this whole process is risk control. So we'll be right back, and we're going to go through the new system we found called the ZDEF system for only $9,000. Unfortunately, it's been sold out.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, I've posted the chart of the E-mini S&P, as you'll see here. Whoops, evidently it popped out. Hold on, let's do the Dow Jones one first, okay? Because this is the one we were talking about when we were on the air yesterday. And let's just get this up here to take a quick look at it. This is a 15-minute chart, I believe. You'll notice here, there was your 382. It came in last night, very late, around 2 in the morning. We had an order setting there to be a seller, and it got filled at 36380. Now that was a 382. The high was 36388, and it broke all the way down to this level right here. And I want you to look at this right here on the low, folks, because the next chart's going to make you realize that, gee whiz, maybe this thing we're looking at has some validity or not. This is not an ABCD because you have a lower price here. If this were a little bit lower, it would be an ABCD, but it's not. Now we're rallying back. We're almost to the 61% retracement now of the high after making this low. And I want to show you why that low was so important and why we had talked about it before it ever really happened. And that's why you're going to see the next chart. And this is where we were right here. Get this put up here so we can see it quickly. And there it is right there. Your low today, right on the money, was a 61% retracement of the YM. Just absolutely spot on. You can't get it any closer. Just like the S&P was perfect, this one was also perfect. Now, if you want to defy human nature and do the work yourself, go take a look at the NASDAQ. I'll give you a little hint. The NASDAQ has made some type of a major turn because on this pullback, instead of making a 61% retracement, it made a 50% retracement. And that's why when it exploded above the 382, that changed the whole direction of the market, which was about an hour or so ago. And that's what we're looking at so far today. Now, the next one we're going to take a look at over here. Hold on one second. Since we're in the realm of these things we're looking at with the YM and everything, I wanted to show you the overall situation that we had yesterday when I sent out the video looking for a short sale. If you'll remember, as we looked at the high that we made on just yesterday, you'll see that that was a perfect 61% retracement of the high that we made, way back here in, I believe it was November, somewhere around in there, and wherever that high was. And actually, it was January. And then you'll see the market has come down, rallied up exactly to a 61% retracement. And today's back off, as you can see, came right down here to the 61% retracement. So we were looking for that. Fortunately, we covered the shorts down there, and it looked pretty good. And I know someone in the back of the room, and especially Johnny over there, is raising his hands, and he's holding up his little placard saying, "Why didn't we buy there? Why didn't we buy there?" Well, folks, when you got a lot of things going, it's not as easy as you might think to keep track of everybody. And we had another really good situation here, and that was in the Treasury bonds. And this is another one that defies human nature, does the same thing most of the time. We'll get this up here and take a look at it. There's the 382 retracement here. We go up and make a new high. Here's the 382. That's where the structure of the market changed. We came down. There was a 382 on the whole move right here. At that level right here, we rallied up today to the exact tick at 131.20. The high was 131.21 in a fast tick. You didn't even see the trade, basically. And we're all the way down here, 2 handles already to the downside, folks. You can see there's also an A, B, C, D, or the P1, P2, P3, P4, whatever you want to call it. But that's what it's looking at right here. And someone asked the question, is that a head and shoulders pattern? Well, it's really marginal because the left shoulder is lower than the right shoulder, so technically it's not a head and shoulders pattern. What it is, it's a Gartley pattern on the rally up here, because there's your A, B, C, D. There's your 61% retracement. If this were equal or lower, then yes, it would be a head and shoulders. But by the definition put out in Andrew Lowe's book, The Non-Random Walk Down Wall Street, the head and shoulders has to be, the right shoulder has to be lower or higher in a bull market. Higher. The right shoulder has to be higher if you're going up, lower if you're going down. And that means you're following the trend. And that's why head and shoulders patterns are such a good pattern to look at. But anyway, that's what we're watching here with that Dow Jones and what it did today. And we're up against, the fact that it came back so strong. But remember, folks, these algorithmic traders, they know these numbers too. If you don't think that they don't know these numbers, then you're sadly mistaken. Now, another thing was happening when we were looking at the low in the E-mini S&P here today, and I want to bring this up to you. Now, please, don't share any of this, with the other people, because this is part of that XZD $9,000 trading system that's now been sold out. But look at this. Right on the bottom, on this small 4-minute chart, you see a perfect A, B, C, D, and you also see a butterfly pattern in between. The butterfly pattern, of course, has a higher low in here. That's what gives it that butterfly thing right there. And then it goes all the way up, and we're still going up. The last price I heard was 408, and I knew it was going higher than that because it was going so fast. So that's what we're watching here. Now, if you think for 1 second that these folks out there that have millions and millions of dollars in research, the quants of Wall Street, these guys that come out of the Andrew Lowe's group on financial engineering, I understand they start somewhere between $300,000 and $400,000 a year, $30,000 to $40,000 a month, folks, per month. And these are kids just right out of graduate school. I mean, now you need doctors. That's the same realm that doctors get paid. So anyway, you got to pay attention to these numbers, folks, if you want to. I mean, you don't have to, but if you want to, that'll give you a pretty good idea of what you're looking at. Now, I want to show you the NASDAQ, because I know we got a break coming up here, but this was the NASDAQ today. What the NASDAQ was doing, when the rest of them were making the 61% retracements, the NASDAQ was only at the 50%, and then it exploded out of here. Now, the key to this market really going higher is when the NASDAQ broke above the 382 of the high. Once it did that, go back and look at your charts, and you'll see that's when the people that were short said, I give up. In the S&P, that number was 4,001. And now I don't know what the last price was, but I know it was higher than that just a little while ago. but we'll have to wait and see if it's going to be anything better or worse. We'll have to wait and see. Well, we just made the 61% retracement in the Dow Jones, or in the E-mini at 40.15. That's a 61% retracement of the move up to the move down. It's right, and the move back up is the 61% retracement comes in at 40.15. But look at the strength that you got to fade if you're going to come into that. You got to be extremely careful up in here if you're going to do something like that. Let's take a little break. 877-927-6648.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, hold on one second here. I'm back, and we have, I believe, Stan Harley on the line as our guest today.
We do indeed. Hello, Larry.
Stan, it's snowing here. I mean, well, that's
Larry,
not fair.
Come to New Jersey. You won't see any snow.
I can believe that. I mean, I just, when we were chatting, I said, give me a break. I said, it can't be snowing here, but unfortunately it is. Anyway, let's get together and talk about our first chart that's coming up here. Stan, before we get started, I've had 3 questions, and that is the bottom that we made here back on January 5th. Is that bottom going to hold, Stan? I know you'll probably talk about it, but what's your feeling on that?
Larry, I do believe it's going to hold. Yes.
Okay. All right. Fine.
Off the October 13th lows, I should say.
Yes.
Based on my view, marked what I call a monthly and a weekly primary cycle low. And I'm going to go into that with a chart here shortly. But
okay, I've got one up here right
we
now.
are making successively higher and higher lows.
Yes, it is.
So the low we saw in late December / early January was what I call a trading cycle low. It came about 49 trading days from the October 13th low, and we are continuing to stair-step our way higher. Wow. But here's what's really important. I'll get into it in chart 4. We've got right translation evident on the charts, and we'll get into that here in just a sec.
Okay, you want to do the monthly first to start off with?
Yeah, absolutely. Let me show my charts here.
Okay. Oh, you can do it now. That's great.
I can do it from my end, yes.
Fabulous. Let's do it.
There we go. Got it. And I'll go to full screen here. Larry, this first chart is a chart of the S&P 500 going back, almost 30 years. And what I have noted here on the chart is a series of lows that define what I call the primary monthly cycle. And the primary monthly cycle is the standout washout low on the charts that everybody is aware of. This is part and parcel of the same cycle series. The most prevalent of these cycles you see on the screen is 49 months. And that's approximately 4 years. Some analysts might refer to that as the 4-year cycle. It's actually 49.2 months, and there's some Fibonacci math that goes into that. But that is the dominant cycle length, trough to trough, on the monthly charts. Now that cycle it's not a fixed heartbeat. It expands and contracts. It expands by Fibonacci 1.618, a factor that I know you and the viewers are very well aware of. That equates to 79.6 months. You can call that 80 months for a round number. And then sometimes it contracts to 0.618 of that 49 months, and that's about 30 months. Those 3 cycles, the 49-month, the 80-month, and the 30-month, if one looks at the charts going back decades, go back centuries, one will find that those 3 cycles define 95% of all the major bottoms on the chart. I'm not kidding. And the remaining 5% are also derivatives of that same cycle, some Fibonacci derivatives. But the important takeaway here is these 3 cycles are the dominant low-to-low cycles on the chart. And it doesn't matter who's in the White House. It doesn't matter who's in Pennsylvania Avenue.
That's good.
Liberal, conservative, it doesn't matter. It's just math. It's just math.
Okay.
And what we saw in mid-October came 31 months from the March 2020 low. Well, that's one of those 3 cycles I just told you. And the next one, based on the math that I'm projecting, should occur about 49 months later after the October 2022 low. So that takes us to November 2026. So I'm going to go on the air here and say November 2026, plus or minus about 2 to 3 months, we should see another standout low on the charts. I have no idea who's going to be in the White House. I have no idea who's going to be in the Capitol, who the Supreme Court justice is going to be, inflation, deflation, I have no idea. But the math says that's where the next major low should occur. Now, if the mid-October lows were an important low in the cycle series, that means we should go up for some period of time. And that's the challenge to ascertain.
Okay.
I actually think we're probably going up for about 5 to 6 months off those lows.
All right.
Go ahead, please.
Are we're still in a long-term secular bull market, is what you're saying?
That's not what I'm saying. Okay. I think the January 2022 lows probably marked the high point for most stocks and most ETFs. I think in this next up move, which I think has a couple of more months to go, I think you're going to see a fewer number of stocks and a fewer number of indices make new all-time highs. And then from that point, I think the markets will definitively turn south. But to bet on the big downside, and I know you share the bearish view, and I respect that, but Larry, I just don't see this thing is ready to head south yet, not just yet. I think we have a couple of more months of modest buoyancy here, and then from that point, a couple of months from now, late March / early April, I think from that point we will turn south, but I don't think this market's ready to head south just yet.
Yeah, well, I covered the shorts this morning down there at the 61% retracement just because I'm a swing trader, but I had no idea we were going to have 500 points down, 500 points up in the Dow Jones. But that's the way it is. That's trading. Anyway, let's fire away. So let's take a look at your next chart. This is good stuff.
Well, to your credit, not only do you do the requisite amount of analysis, but you also apply the requisite amount of risk management. And I hear you constantly stressing the importance of stops. And oh my gosh, that's just paramount, absolute paramount.
Yes, it is.
You can be the best analyst in the world, but if you don't manage the risk, you're not going to be left with too much money at the end of the day.
That's for sure.
Chart number 2, Dow Jones Industrials, going back about a year and a half here. And what I've done is I've marked the highs, and oh my gosh, the same number pops up on the daily chart, 79.6. Call it 80 trading days. And this number, it's a universal constant. I see 80, and half of that is 40, the 40 trading day cycle you've heard me talk a lot about. All markets, all time frames, it's a universal constant. And there's some Fibonacci relationships that go into defining that. But on the daily chart, as we can see here, the dominant highs going back the last couple of years have been defined by this 79.6 trading day cycle. And the next, assuming the pattern continues, it may or it may not. And usually when I talk about these things with you, they stop working.
No, Stan, you've been pretty good, pal. You might have missed one or two, but
gods are up there. They're wringing their hands and they're saying, by golly, we're going to make this guy look foolish. But
I've been there and done that. So
just in case they're not listening today, Larry, the next low and this next high in the cycle is due at the end of March.
Okay, stay with us, Stan. We'll be right back with Stan Harley, folks, the Harley Stock Market Letter.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks. We're speaking with Stan Harley, the Harley Stock Market Letter. Please continue with your next chart, Stan.
Yes, Larry. The next chart I thought we'd take a look at is an index that's not widely followed, and I don't know why, but it's the New York Composite Index. And it is a measure of all of the stocks traded on the New York Stock Exchange. And as such, it's the broadest measure of market activity. What's interesting here is the New York Composite is 9% from an all-time high that was set back in January, as one can clearly see. You can see that the most recent highs took out the December highs, which has not yet occurred in the S&P, but the New York Composite has gone higher.
Wow, I wasn't aware of that. Wow.
So when the broad market is very strong, which it is, you got to pay attention to something like that. Other takeaway here, the 200-day moving average on all of the averages, including the New York Composite, is still coming downhill. As you can see, that red line still has a negative slope. So I'm not looking for a runaway move to the upside from present levels, although I think we are going to chug-a-lug our way higher. But there needs to be some sideways structure above that 200-day MA to cause the slope to flatten out and eventually turn higher. And so I think that's going to take place over the next several days. But I believe the path of least resistance, because of the cycles we talked about in the earlier segment, are heading higher. So I think there is a possibility. This is not a prediction, but there's a possibility. We might see the Dow and the New York Composite make a token new high in a couple of months, unconfirmed by any of the other major indices. I cannot rule that out. And if that were to happen, oh my gosh, you'd have the analysts on all the financial media proclaiming the bull is back. But in fact, that would be the big divergence that would signify the final high if that were to occur. Or we may just get a right shoulder high in the Dow and the New York Composite. I don't know. Either way, I still think we have a couple of months of upside before this thing turns south.
This next chart is the cash S&P index, and I think you give us your description of right translation and left translation again, because it's always good to hear, because you really know this stuff as well as anybody I've ever talked to. So please continue.
Yes. This is something that I have observed for a long, long time, this phenomenon called right and left translation. Essentially, one needs to look at the trading cycle lows. Since we're looking at a daily chart, we need to look at the trading cycle lows. If we were looking at the monthly chart, we'd look at that monthly primary cycle lows that we discussed earlier. But for the present example, we're looking at the daily chart. So we look at the daily, the standout lows on the chart, what I call the trading cycle. And then take note of where the crest in that cycle, the crest being the high point, occurs relative to the midpoint between the two troughs that define the trading cycle. If the crest is to the left of the midpoint, which happened from January all the way down to the October lows, we have what's called left translation. Left translation is characteristic of bear market structure. You can see from we saw it in January, and then in late April, and then in late March, then in June the 2nd, August 16th, all the way down to the October lows. The high points in that 79.6 trading day cycle all occurred to the left of the middle of the cycle. And that's characteristic of bear market structure. Now we're starting to see evidence of right translation. So the initial trading cycle, which went from October 13th into the last week in December, take note of where the high occurred. It occurred to the right of the middle of that cycle. That's the first time we've seen that in over a year. Right translation is characteristic of bull market structure. Now I put an RT right over the high of where we are right now, assuming we're going to have right translation in the current cycle. I probably should have put a question mark by it, but since the prior one was right translation, and my view is we're heading higher for a couple of months, I'm anticipating right translation once again, and right translation is characteristic of bull market structure, meaning higher prices lie ahead.
Wow. That's really good stuff. Stan, I'm going to post into the room here your contact details, so let me get this up here, and then we want to tell the folks how they can reach you, and what services do you actually offer? That was one of the questions someone asked.
Well, I have a website that people are welcome to go to, harleymarketletter.com, and all of my contact info is available there.
Okay. Now, do you have a newsletter too that you send out to the folks? I know I get it, so I guess you.
I do. If one is interested in that, they can certainly find out information on my website. They'll have to contact me directly. I currently am having to do some reprogramming on the site, so they can't initiate the subscription to the website, but my contact info is there, and people are certainly welcome to get in touch with me directly if they have an interest.
Okay, well, listen, thank you very much for being our guest today. You've been really accurate through these months that we've known each other. Years, I guess, 20, well, more than 35, 40 years, I guess. Yeah, 40 years.
Quite a while.
Yeah, it is. It certainly is.
Going back to our days in Southern California.
Yeah, it looks like the S&P is going to close up on the day. You got to love it.
I'm shocked. I'm shocked.
Yeah, I saw it down there, Stan, and I swear to God, I had my hand. I covered the shorts a little higher because I wanted to make sure, we had a nice profit and everything. And I said, gee, look at these. I said, they're all stopping at 618. I said, this is a major bottom. And I got tied up, and next thing I knew, the S&P's up 15 points off the higher, and I never chased it the whole way up. So anyway, that's neither here nor there.
Well,
so
right translation is indicative of higher prices ahead, Larry.
Yes, it certainly is. Yep. At least I wasn't short, so that's the good part. Hey, listen, thanks for joining us, buddy. We'll have you on again in a few weeks, and stay warm over there.
Will do.
Okay, folks, I wanted to, since we're talking about that, and that is Mr. Tucker. He keeps forgetting that I have a radio show at this time. I should have him on as a guest. Hold on just a minute. Byron, I have a radio show. You want to be a guest today? I'm finishing up the show. I'll call you after it's over, okay?
I'm in the car. I'll catch you later.
All right, bye. Well, that's the reason why he didn't call. All right, let's take a look at the gold market, folks, because here again is one of those things. Now, don't share this with anybody, please. We're going to get up here and show you the trade that we were looking at yesterday. Now, remember, these are not long-term trades. These are trades following, a 15-minute chart. You got to, act like it's a monthly chart because that's what you're looking at. Look at the low today, folks, in the gold to the exact tick, 78%. Look at this beautiful XYZ DEF pattern right here, also known as the ABCD Gartley, right there. And look at that. It breaks. Folks, we're back getting ready to make a new high. That means that we're going to make a B, C, D, heading towards that big target that we've been waiting for in gold, which is 1975. in the June gold, and let's try that, folks, in the February gold, but we are going to be trading the April gold starting on Monday. All of our stuff will be moved over to the April gold because more open interest is coming in there, dropping off on the February, so they're rolling over already. So the spot month will be April. That's J.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, I posted the chart of the E-mini S&P going over the last 10 days, as you can see. The Dow Jones Industrial Average. We made a higher high yesterday. That was exactly at the 61% retracement. There's also an ABCD pattern there. And we waited for the market to break. It made a 382 retracement, just absolutely spot on last night at 33, 8. I don't even remember what the decimals are because I don't look at it. It was 33833, I believe. Yeah, and then the market broke all the way down and made a 61% retracement. You can see the second line right here. This was the 61% retracement, and then of course it's up on the day now, so it's had a huge move. Just a minute, and I'll tell you what the fill was on that because it was really pretty much spot on. It was 33780. 33780. Then it went all the way down to 33347, and we're back to 33746. So through all of that, it's up and down. So that's really what we're paying attention to. The same thing occurred in the gold market. where we had a big profit in it, and we took the profit, didn't sell the 382 back or anything. We just booked that profit and said we're going to wait, and that's all we were looking for. When we get a really nice pattern on a 15-minute chart and it completes, one of the cardinal sins that you do if you do this is to start switching to an hourly or a daily, thinking that there's going to be something bigger out there. Folks, if you're trading a 15-minute chart, take the trade off on the 15-minute chart. Don't take it off on a 5-minute chart or an hourly chart. Take it off on the 15-minute chart. That's the one that'll lead you to the promised land. The others are tough. So live every day in an attitude of gratitude, and may God bless. I believe tomorrow, with a little bit of luck, Jim Bartolioni of Bart's Charts will be flying in on his F-18, and we will see if we can get him on the air. I will not be here on Friday because I'm having a tiny bit of surgery done, and oral surgery, but it's not a big deal. And that's the end of that story. So live every day in an attitude of gratitude, and may God bless.